Thank you very much. That was very inspiring, and I think you've really nicely set the tone for many of the themes that will come up over the next 2 days. Also, the fact to remind us that financial inclusion can actually contribute to financial stability, that we all have a lot to learn from each other, and I think this is why we're all here, because we want to share our experiences and learn from each other. And I really like the image of immunization. We're always talking about the umbrellas, which is actually the reason why you have the umbrella in your bags, so as a protection. But I think we need to work on that immunization theme. And since we're just 10 years, as you said, still young enough to get immunized. What you said was also about climate change and so forth was also a very good transition to the next panel, our high-level panel, which will look at the role of insurance in sustainable development and the role that insurance supervisors can play in that context. And the panel is moderated by Vicky Saporta, who, as she puts it in her day job, is Executive Director of Prudential Policy at the Bank of England. But Vicky also holds the very important role of chair of the IAIS Executive Committee. And in this position, she's firmly backed the IAIS the A2II. Now I'm getting confused as well. Too many acronyms. So she's firmly backed the A2II development over the years. So if I could ask Vicky and her panelists, Babak, Axel, and Tomás, to please come up front.
So, can you hear me? Just to say that I am delighted to be invited to moderate this panel, this very distinguished panel, but also to participate in this event. I love birthday parties, but I particularly adore the ones that involve very adorable and useful people. And I think this is what the Access to Insurance initiative is. I don't come from a developing country, neither have I worked in development for a long time, but I have been involved heavily in the IAIS for the past 4 years. And I have so much been impressed by the role that the Access to Insurance initiative is playing with very limited resources, actually, by leveraging on the supervisory community and on partners to actually implement global standards, insurance standards, and to promote financial inclusion through insurance. It is doing a fantastic job. It has evolved, as we heard, from being a spreader of knowledge to doing implementation. It still does quite a lot of advocacy, very successfully. And I'm really, really excited to play a part in my role as chair of the IAIS in strengthening our partnership in the years ahead. As Jonathan said, the IAIS just adopted its new strategy. We have a very sort of important set of meetings ahead of us this year, and then we pivot into 2020 into our new strategy, and it involves more implementation, more capacity building, more giving back to the supervisory community, and financial inclusion through insurance is a big part of that. So if anything, the role of the Access to Insurance initiative and our other partners in promoting that is so much more important. So thank you very much, Access to Insurance. Thank you, founding mothers and founding fathers, donors, stakeholders. Thank you, Secretariat, for making it to your 10th year. There is a glorious future. Again, happy birthday, bon anniversaire. Feliz cumpleaños. I tried to do the German thing, but too embarrassing. Can you do it? Thank you. So what is the topic of this panel? The topic of the panel is the role of insurance in sustainable development, in particular in the big development initiatives, the agenda for the UN, the 17 Sustainable Development Goals. Despite the fact that we probably in this room, a number of us understand the importance of financial inclusion, and within that, insurance, in achieving sustainable economic development and all the benefits of that, financial inclusion, let alone insurance in financial inclusion, is not very much mentioned, if you want, in these big agendas. And what I'd like to explore is why and what we can do and what supervisors can do. So that's kind of the topic of this session. More broadly speaking, the challenges that we face over the next few years have become staggeringly big. Protection gaps are huge, and they're not closing. Progress is stubbornly slow. I mean, I can float you numbers, but I mean, a staggering number is that closing the infrastructure gap that we need in order to promote sustainable growth between now and 2040 is a $94 trillion, $7 times US GDP between now and 2040 challenge. And we need to do it to provide sustainable economic growth and to provide protection against the climate challenges that we've just heard. And despite that, only 2.5% of insurance companies invest in these infrastructure assets. So 2.5% of the assets of insurance companies are sustainable infrastructure assets. So the contribution of the insurance sector to closing this gap has a long way to go. And this is one illustration. I could float you lots of numbers about the challenges, and they're tremendous, but also the opportunities. So this is what I'd like to explore a bit more. And I have in front of me three people who really understand this subject and have much deeper knowledge than me. First, Axel Klaphake, who is a director at the GIZ at the moment. He has a PhD in environmental economics. And if I can find his CV, rather than trying to get it to remind me. He, in environmental management and planning rather than environmental economics, I beg your pardon. And he has really worked on issues linked to economic development and the sustainable management of natural resources, holding jobs collaborating with think tanks around the globe. And he's now heavily involved as a head of the Division of Economic and Social Development and Digitalisation in the Global Department at GIZ headquarters. So he can really give us the development perspective. Then I have next to me Babak. His surname I cannot pronounce. Yes. Who's heading the Toronto Centre, which is, of course, dedicated in providing capacity building for financial supervisors. And it's a fantastic initiative. So he can tell us about what supervisors can do to promote economic development through insurance. And finally, we have Tom Soley, Tomás Soley, who heads the insurance supervisor in Costa Rica. He also chairs Axel, which is the Latin America Association, Regional Association for Insurance Supervisors, a very important regional partner of the IAIS, and who personally has led a regulation actually on inclusion in insurance in Costa Rica, and also has made strides in practice as a supervisor implementing it. So with that, I will pass immediately to Axel, just to say a little bit of the format. I will speak, I will ask a few questions to each speaker. The session for each speaker needs to last for 15 minutes, and we started a little bit late. So I will have to be a bit strict, and I've been asked to be strict by the speakers themselves in actually on the 15 minutes, because otherwise we're not going to have lunch. And so if you're overrunning, you will see some flags coming.
So you're standing between lunch?
You're standing between lunch in this amazingly beautiful place, actually. You're standing between lunch and sunshine as well. So, so the pressure is on. So with that, if I may, Axel, there are some people in the audience who might not be so familiar with the 2030 Agenda for Sustainable Development and the Sustainable Development Goals, the 17 goals. Could you please give us a brief overview of what the Sustainable Development Goals are and what role insurance can play in meeting them?
Yes, thank you very much, first of all. I will do that in a minute. Let me first say also as a representative of GIZ, also a few words of thanks. I have also promised to extend a herzlichen Glückwunsch to the initiative in German. No, but I just want to mention that this initiative, A2II, is certainly also for GIZ as an organization that implements projects mainly on behalf of the German government in the field of international cooperation. It's really a very important collaboration, and I just wanted to also send this signal that we really feel very proud of implementing this together with the key stakeholders that are all present here in the room. I think we have a long history now of collaborating for 10 years. I think we have also already been pretty involved. Our colleagues, some of them have been mentioned already. Brigitte Klein is certainly one of the most important contributors right from the onset of this initiative, but also the other colleagues that are present here. So it's really something we are proud of. I think it's a very sound, a very strong partnership. Over the years, we have also, we had to find solutions to some, challenges also from a managerial point of view, and from even the practical nitty-gritties on how can we really bring GIZ's processes and sometimes also the red tape every bigger organization brings to the table together with the ideas of the initiatives. But all in all, I really feel that we have reached a very good status of collaboration. We are really looking forward to hopefully another decade. It has been mentioned, and maybe even longer. So I think really today we think it's a very, very sound partnership we are really very proud of. I think it has also been said that the institution is maybe even a role model in terms of the governance structures, and that's also something we really feel very strongly. GIZ has the honor of supporting quite a few secretariats of global nature, and I think you, with this setup and the governance structures, is always referred to as really a model that works, that really brings partners together, and that really helps also to have the level of transparency we need as such an initiative, and I think that's really great. Also, institutionally from GIZ, those few words you might allow. Back to the question. I think maybe some of you might not be aware of all the subtle elements of all the SDGs and all these targets and indicators. I don't want to take you through, all the details here. I think to me, from this SDG perspective, there's maybe some general observations we might want to be aware of. First, the SDGs since 2015, they have put international cooperation in a broader context of development. I think compared to the Millennium Development Goals, which still focused very much on poverty in their focus, really, but also had still the flavor of, poor people in developing countries being recipients of international support. I think these Sustainable Development Goals would focus much more on poor people even as an actor and not as a sheer recipient, as an autonomous person, as autonomous people that take their decisions, and we want rather to empower than simply transfer resources to. And I think in this spirit, I think, of course, you can immediately derive from this the big role insurance can play in order to empower people, in order to enable people to really pursue a sustainable life. I think for those that have experiences in developing countries, and I've seen the hands up, quite a few colleagues coming from developing countries, I think what we always see is that big progresses are also supported by international cooperation, can really be destroyed very easily in events of risks, in events of really something happens, maybe even something small in families. There might be a death, there might be a health issue, and immediately you really see what has been developed over years and years with so many efforts can easily be reduced to basically square one and to zero. I think that insurance can play a role here. Michael Krake has mentioned it as with this metaphor, which I also like, immunization. I think it's crystal clear. We also see from the SDG development, from the SDGs, the Sustainable Development Goals, that we really want to see economic growth and entrepreneurship really thriving and taking up. And I think also in this spirit, we have so many examples where we can see that farmers in developing countries can benefit so much from insurances by the risk-reducing effect that we see. So I think those are probably the big examples we've got. But I think for the insurance industry as such, which is also important for sure, is the asset management side and the investment side of the insurance industry. I think this is probably also something we will be discussing over the next 1.5 days. I think the insurance industry also, in their role as investors internationally, has also an increasing interest in doing this in a sustainable way, in contributing to the Sustainable Development Goals, and that's also something also we as GIZ we try to focus on even further than we did in the past.
Thank you very much, Axel. So it seems you explained the straightforward, if you want, link from that insurance can play a key role in achieving the SDGs. Yet, as I mentioned earlier, it receives relatively little attention in the discourse and debates in international development, with the exception, perhaps, of the role that it can play in climate change and dealing with climate risks. Why is that, in your view?
Yeah, this is a very, very good question. I think if we look at the documents of the SDGs, I think indeed the term insurance is only be mentioned once. And I think this is, in a way, it's a bit telling. Even the term risk, I think it's not mentioned so often in the document. And I think it's something, I think the interpretation, I'm not so sure. Maybe there is really different reasons. First of all, I think I think we have discussed this morning, and I've also mentioned the positive effects of insurance on the development in the countries. However, I think it's still a pretty abstract discussion. Sometimes I think what would be good is to have better examples, maybe concrete examples, really people can learn from, and also decision makers can really help decision makers getting really the picture of how that could work in practice. I think we also lack maybe still sometimes the numbers and the quantified results of our work, which is increasingly important in the political field. Of course, our political decision makers in BMZ and in other ministries, of Because that's what they would always tell us. Give us the numbers, give us really something what you achieve, something we can communicate also politically. Maybe that's something to look into. And really to overcome sometimes the rather technical discussions we are having about, the details and the nitty-gritties of how insurances can be best designed. I think that's what I think. But as I said, I think we have so many rich examples, and I think there is good potential of overcoming those hurdles we are still facing.
Thanks very much, Axel. I do, personally, I was looking through the material produced by Access to Insurance Toronto Centre, GIZ actually, in preparing myself for this panel. And I have to say, there's just as sort of part of the audience, what I did find most effective were the examples, were concrete examples of success stories. And as you say, numbers as well actually make the issues. So personally, I was kind of struck by your point. And given that, given all of this, what do you think are some concrete steps that all of us can take to ensure that insurance is recognized as a key instrument, as key tool to achieve the Sustainable Development Goals?
I think this is a very complex question, I think. But let me just try. I think communication we have mentioned already. I think there is certainly potential for doing more, coming out with more examples, trying to bring some numbers and to communicate in a maybe way that is also easy to digest for non-technical people. I think this is maybe a crucial aspect. Secondly, I think also a bit self-critical how we deal with the issue of insurance in our programs. In an organization like GIZ, looking at our portfolio, of course, the issue of insurance does feature very prominently in many programs we are running on financial inclusion, on financial sector development. I think there's good evidence of how we work and what we can achieve. But I think when it comes to the more sector-related programs, there's only little evidence of us integrating insurance aspects really thoroughly and systematically in our programs. This is certainly something development cooperation community can do better in the years to come. I think Michael Klaphake has mentioned, and it has been mentioned by several colleagues already, the issue of climate change. Maybe that's one of the exemptions where we already see how we can integrate this topic into sectoral programs. But I think this is, to me, something we can certainly do much better in the years to come. I'm also responsible for global health programs in GIZ, and if I look at this situation, for example, there's only very, very little mentioning, very little relevance and evidence of us also focusing on insurance issues in those sectoral programs. I think this is probably an appeal to the development community. I think when it comes to the countries, and I also know the situation in a few countries in Africa a bit better, I think what we know from the situation in the different countries, I think the regulatory bodies, the supervisory bodies, I think they manage to a different degree really to reach out to the political decision makers. I think this is probably also still something here and there can be improved. I think there is good evidence of countries, good examples where really the regulatory bodies have reached out to decision makers, where they have shown how they can convince also national development planning authorities and other bodies that are really important for developing the basic economic strategies for the countries, really to support this. I think those are maybe the few examples I can give. I think there were also, I think, two hands from the industry, the insurance companies. I think the insurance companies, they certainly have the ingenuity to develop products further, but what we also see, I think, in a couple of countries, that product innovation and product development is still an issue. Insurance products, and as I said, also the asset management, the investment side of the insurance companies, there's also still room for doing more.
Thank you very much, Axel, for these insights. Turning now to Babak Abbaszadeh. Babak, the Toronto Centre, of course, which is very, very well known in the financial regulatory community internationally, provides capacity building programs to supervisors and regulators to promote stronger and more effective financial regulation and supervision. And in your mission, the Toronto Centre's mission, you recognize the effect that this has on economic growth, job creation, and poverty reduction. So could you explain to us how effective regulation and supervision contribute to these and other development objectives?
Sure. Thank you very much for that introduction. And before building on Axel's good words, I just want to say I'm very delighted to be here. Just to underscore the importance of it, today is considered Labor Day weekend in North America, and the only three people working are Connor, me, and Tim in the back, right? And Labor Day wasn't even Labor Day; it was May 1, 1890s in Chicago. It's a different long story there. We'll come back to that. But A2II is a very important partner for Toronto Centre, very reliable. We see them in the trenches with us, working hard. And it's a privilege to do at least a couple of programs with them every year. Hopefully we can do more. Now, in terms of turning to your question, this is a very interesting question for me because it's kind of like trying to define electricity. Many people don't understand what electricity is, but they all know what happens when there's no electricity. So financial sector supervision and regulation is kind of akin to that. So let's start with some of the problems of weak regulation and supervision that contribute to financial crises and suboptimal economic growth, which tie one way or another to what Axel talked about and what the SDGs are all about. So these failures can stem from several of these factors. The lack of authority to act, such as competing mandates for supervisors and regulators or inadequate legal powers. And by the way, these are not just limited to developing countries. Last time I checked, the great financial crisis did not start in the developing countries, right? So these really affect everybody. The other one is the lack of framework for action, such as weak governance or substandard supervisory methodologies. The lack of inability to do their jobs, such as lack of expertise or resources, or the unwillingness to act. And that is issues such as regulatory capture and forbearance. I'm happy to discuss all of these later. But conversely, with good capacity building, regulation and supervision can actually turn this around into a virtuous circle. You know, you can have strong supervisors and regulators that can drive improvements to the regulatory framework, reforms that support more effective supervision and enable innovation, responsible market development, more products, better financial services, distribution channels, leveraging technology, financial access, inclusion, including inclusive insurance, leading to economic growth, reducing poverty, raising standard of living, and ultimately supporting the SDGs. So the SDGs, when it comes to inclusive insurance and supervision, the good work that even GIZ's done, I've seen CGAP and others do as well, and also our own analysis. At a primary level, good supervision, good financial sector development can contribute to SDG 1, which is end poverty, 2, end zero hunger, 3, good health, 5, gender equality, 8, economic growth, 13, climate action, which is extremely important. At a secondary level, I'm not going to rhyme numbers, but there's about 5 or 6 or 7 of them that actually are indirect. So Toronto Centre and its partners such as A2II and CGAP and others play an important role in making all of this happen. We offer a wide range of programs. Every year, about 70 to 78 programs across sectors, not just insurance, but banking, securities, pensions, supervision, to build the capacity of financial sector regulators to support inclusiveness and financial stability. I'm so lucky to be sitting next to Tomás, who's the head of SUGESE. Toronto Centre had the privilege of having a long-term engagement with SUGESE for 3-4 years, I think 4 years, on risk-based supervision. They had very dedicated staff, but at the end of the day was the contribution and leadership of Tomás. So leadership matters. But that's one concrete example sitting actually next to me right now to talk about that. And I will conclude by emphasizing that effective regulation and supervision lay the foundation for the formal financial sector to innovate to meet the varied needs of the country and its consumers, including those who are currently underserved. This contributes to reducing poverty and building a more sustainable and inclusive economy. I know I'm under time structure, but since I've been recorded, I would like to thank the governments of Canada, government of Sweden, the World Bank and IMF for their stalwart support of the Toronto Centre over the years. And as we are now in our 21st year, their support is critical to us, and we hope to be able to continue our partnership with A2IL.
Thank you, and happy birthday to the Toronto Centre.
Oh, no, that was last year. But
Right, so you're a full adult now, 21.
pretending.
So, I mean, as we heard from Axel, sometimes, I mean, what you just said made perfect sense to me, and it was very sort of lucid. But it's still at the abstract level. Could you give me some concrete examples of how regulators and supervisors are actually helping to bridge the protection gap? I mean, I'll come to Tomás and his particular example, but from your experience, could you give me some examples?
Absolutely. I would say regulators and supervisors can help bridge this gap by removing barriers to both supply and demand for insurance. A concrete way in which we approach that is through proportionate risk-based supervision. So we've been teaching proportionate risk-based supervision going back to 2008, basically, and ramping it up since 2010. And this is where you look at insurance products and the range of insurance products and try to tie them to the need that they're trying to serve. If you have a very basic insurance product, there's no need for reams and reams of paper for application. You can reduce that quite a bit. And you can help folks with making, having examples like credit unions, agricultural co-ops, and post offices actually being able to distribute insurance, and motivating providers to identify new products, opportunities, and explore ways to deliver that service, including those who are underserved, and just being able to experiment with sandboxes. That's actually very important. And enabling mobile phones. Already we heard the example of M-Pesa. There are other examples there as well. But at the same time, let's be clear about that. When you go to some developing countries, here our cell phones are pretty big screens and all that. In some cases, you see very tiny screens. There's all kinds of conditionality to that insurance product or whatever. So understanding the rights and all the sequences and consequences of that are very important. The other thing is, and I refer to an IMF paper, it's more on the banking side, but has some application to insurance as well. As we increase more and more inclusiveness and more people are being brought into, especially on the credit side, this could potentially lead to instability in the financial sector as well. So, but what preempts that? What's the inoculant for that? And I heard immunization already. That's the role of the supervisors and good regulation, to be able to mitigate those risks. Because when you're doing proportionate, by necessity, you have to look at risk-based. And risk-based, as opposed to, I'm getting a little bit technical, sorry about that, as opposed to trying to understand and check every risk, you try to understand the risks as they apply, and then expand those as you see tensions within them. And proportionality can extend to flexibility for small value transaction, where the risks are lower. Knowing your customer requirements can facilitate the supply of microinsurance to lower income people who might lack formal identification. We're talking about seed insurance, we're talking about, and then in my next question, I allude to some specific questions around, let's say, the female population as well.
Great, thank you, Babak. As you just said, this is a good segue. I know, and I've actually read some of your material, the Toronto Centre is very, very active on gender issues. What can supervisors do to promote women's access to insurance products that in some countries is woefully underserved, that are needs-based?
And on behalf of this all-male serious suit panel, I apologize, but I'm going to try to represent that a little bit. UN SDG 5 is concerned with achieving greater gender equality and empowering women and girls. This is also consistent with Canada's feminist international assistance policy, so Canada has put itself out there with that policy. And you might ask, how is this relevant to us, to supervisors, and what can we do? So we believe, Toronto Centre believes, inclusive financial systems are a powerful instrument for women's empowerment in developing countries especially. It's women's ability to borrow, save, control their own money, insure themselves and their families, to reducing poverty and promoting inclusive growth. And unfortunately, more than, as you were alluding to, more than 1 billion women in developing countries do not have access to formal financial services. So we're working very hard to build that awareness. Some of you have attended some of our IMF, World Bank executive panels, have seen the work we've done, the webinars and others. So what are some of the examples of specific action? Is basically facilitating better understanding of the needs of women through gathering of market data that is gender disaggregated, using surveys and focus groups, and engaging with key stakeholders such as organizations that work with them financially underserved consumers, especially women. In a neighboring country to Tomás, we are actually organizing a long-term country engagement in Honduras on gender equality and helping them with disaggregating data and analyzing all of that, how that applies to their banking and insurance sector. So the work is ongoing and we're actually learning, right? And we're learning as we go. And ensuring that women in their own organizations have a full opportunity to contribute and advance, encouraging industry players, but also encouraging, as women participate more and more in different professional organizations, even actuarial organizations, to leverage that diversity, maybe through their work and their own active involvement, better products can become developed, right? Anecdotally, one of the biggest barriers to Toronto Centre ourselves, I hope the camera could just go off for a second, was our own leaders on our governance structure who were very accomplished women, but they thought that promoting gender equality and all that is not something that we should be actively working on. So for me, it has been an exercise of opening the cage more and more, trying to do more. So let's see if I'll go back, and I'm working again on Monday morning, but we'll see on that one. But one of the things I want to quickly touch on, if I have any time left, is we're talking a lot about supervisors and regulators. But what does this really mean for the insurer? So let me try to bring a bit of a dialectical approach to that. Sorry, I'm in Germany, so I really can't resist not using that term. Hopefully, I'm not using it incorrectly as a former student of philosophy. A typical insurer seeks to comply with all regulations and to maintain positive relationships with its supervisors while growing its business and profitability. That insurer seeks proportionate regulation, fair supervision, and wants sufficient flexibility to avoid unnecessary barrier to its success. So that means if that insurer is successful in doing that, then they should be, I might as well go as far as saying, entitled by a supervisor to a fair treatment. And that in turn will help them innovate more and better products. So this creates an environment in which they will be encouraged to do that innovation, developing insurance solutions, and meeting the needs of underserved, including women, and enabling them to join their fellow insured citizens. So there's a lot of stakeholders involved in this, and I think it's an important path to go on. And inclusive insurance, the momentum behind it, I think, needs to rapidly take off in order to be able to make a bigger impact.
Thank you very much, Babak. And now turning to Tomás Soley. As the head of the supervisory authority in Costa Rica, you have driven, as I mentioned earlier, the development of an inclusive insurance regulation and a law that will regulate inclusive insurance products and distribution channels. How is this linked to the broader context of your country's development objectives?
Thank you, Victoria. of course, is totally linked with the SDGs goals. But before starting on this topic, and I apologize, my English is not so fluent I would like, but I will try to read some of my notes and share with the audience some of my ideas. Before starting on this topic, let me congratulate to A2II for this 10th anniversary and the excellent job that have been done. Latin America as a region have received an extraordinary support from A2II, and I must to say that as a chair of us all. We were working together in order to achieve a more stable and inclusive insurance market. I am honored to share this panel with people as organizations that have been strategic partners of SUGESE for a long time. Maybe you don't know, but Costa Rica have opened its market since 10 years ago. And we must to begin the supervisory body since zero. So this kind of topic like access to insurance was not a priority in the first steps, but we reached that in this moment, and it's a good moment because we are working with the SDG goals with the government. Thank you very much, Babak, for those kind words. Actually, having the support of Toronto Center in our RBS approach was a wonderful and very important topic for our superintendents. The Toronto Center, as well, A2II recognized that each jurisdiction is different and must be taken into account to adopt best regulatory and supervisory practice. That is very, very important for our countries. We have to adopt some of the best practices, and we have to have clear the proportionality rules in our country too. But let me please give you a little summary about my country. Costa Rica is considered by the United Nations a country with a high human development index and medium high income. That is a little problem because we are not too poor to receive a lot of cooperation, but we are not too rich to be total independent. So Costa Rica is trying to be a laboratory for any different topics. That is clear with the commitment that we have with the Paris Agreement. Worldwide, it recognizes as one of the oldest and most robust democracies in Latin America, and having abolished its army in 1949 and giving its vocation as protect environment. Costa Rica in 2017 joins 43 other countries to present their first voluntary national review. And in this way, that decision was natural because the political constitution of our country currently in force sets the foundation of human development in the country, abolishing the army and giving priority to financing free and compulsory education, universal health, and access to drinking water and electricity services for the majority of the Costa Rican population. Nevertheless, the social protection gap is still wide, like other developed countries in the world. Costa Rica is no exception and had the opportunity to take advantage of the recent opening insurance market. According to Mafre Foundation, at the current market growth rate, it will take between 11 and 22 years to close the social protection gap in our country. And this is a huge data, and this gives us a real big task to do. The inclusive insurance project will be an extraordinary tool to achieve the SDG and reduce the social protection gap, but the definition of appropriate public policies will be a critical issue. It must be the government to making this definition, and it will be probably the thing that kick off the better works of our insurance in our market. In that direction, Costa Rica Voluntary National Review of the SDGs defined the priority dimension of work to reach these commitments. There are some initiatives to target 5 of the 17 SDGs. It is not difficult to understand that some of these can be easily supported with more access to insurance, like the number 1, number 2, less poverty, number 5, the gender agenda, etc. The protection gap is really low. I have here an example, especially in rural and less developed zones. The poverty in Costa Rica have a face of woman and have a face of rural woman, and that is really hard. In 2016, the Hurricane Oro fight one of the poorest zones in Costa Rica in the north and affected 50,000 persons, and economic activity and rural infrastructure suffered deeply. It's amazing that only 3% of the total of losses were insured. Only 3% of this. And if we take the history, the figures are not different when we review the catastrophic events in the last 20 years. Most of the affected have had a slow recovery path, and if they would have insurance. Poverty in the country has a female and rural face, I told that. And for instance, as part of SDGs, the government introduced some initiatives to reduce the poverty rural population, like the following: family farming and reduce poverty, sustainable and resilient agriculture, gender equality and empowerment of rural women and female fishers. It's clear that all of those initiatives can be attended to or complemented with insurance programs, giving the target population more protection and resilience in order to increase productivity, as well as stop the vulnerability and poverty. I believe that the effort that we are facilitating the access to insurance will be a big huge in order to align with the SDGs.
Thank you, Tomás. So in your experience, what barriers, barriers, obstacles have you seen to insurance supporting national development objectives? And what is the role of financial supervisors, insurance supervisors, in helping overcome these?
Okay. To answer this question, we must keep in mind the scope that the law provides to the supervisors, and that may differ from one jurisdiction to another. Jonathan Dixon says just a moment that is not there is not a trade-off between more access insurance initiatives, inclusive politics, and working for an stability of the market. But in fact, our laws have some barriers in this way. It's clear that SBR approach allows us to appoint these objectives through the focus on material risks, the adoption of robust corporate governance and risk management schemes that are very important to develop and access and insurance and responsible inclusive insurance in any markets. The adoption of robust corporate governance is important for that, and as well capital adequacy is one of the principal goals. But some jurisdictions may further progress in conduct market too. In the case of Costa Rica, allows addressing these 3 dimensions, but it's clear for us, and maybe in other laws is the same, that the regulator does not make public policy. The regulator he have another goals and have another commitment that is important, and maybe will be a conflict of interest if you have both lines, making the public policy and supervise the market. And there is some of the barriers. There are other government agencies that do it, who often do not understand or recognize the role that insurance could have in the achieving of SDGs. It's funny, I made the same exercise that Axel did in order to reach some of the keywords that are present in the debate. The most important words, or the word that we have here, everything is sustainable, social, poverty, education, climate protection, financial inclusion, hazards or risks. And I find something very close than Axel said about the officials and the most important documents in these topics. The official document of my country has only 68 pages, and I got the following reference. For example, sustainable, 130 times was mentioned in the document. Social, 115, but social inclusion only 3. Poverty, 108, education, 80, but financial education was just once. It's amazing how the document ignore some of the topics that we are talking in this panel. Climate, 37 times, but climate change, 30. The most mentions are from climate change. Protection, 30 times, social protection, 12, but protection gap is not mentioned at all. Financial, 19, and financial inclusion only twice. Inclusion 10 times, hazards is not mentioned at all in all the documents. And that is really strange, that is the word insurance. The word insurance is mentioned 7 times, but is related with compulsory social security scheme, not with the private market of insurance. And that gives us a real show us what is happening with the insurance in the debate. It's invisible in the debate. Maybe the other barrier that is important to mention is not all countries have a public policy, explicit public policy to reduce the protection gap. That is implicit in others documents or in others kind of discussions. And the third one that for me is important, Axel and Babak talk about that, is in our countries, in developing countries and in poor countries, actually, financial education is too poor. We have no a good level of financial education, and the business conduct is weak too. Consumer frustration is proportional to the gap between expectation and reality. I mean, if there are not a good financial education, the expectation could be more than in the real world is. We know that insurance contracts are complex for the average consumer, and we also know that fair treatment and transparency are not always the rule. There are an important barrier to insurance confidence, and it's critical to attend it. It is simple. Consumers are requiring an easy-to-understand products that respond to real coverage needs, transparent and easy to charge. But the supervisor are asking for a product that will be sustainable in the way in the long paths, that are actually equilibrated, and for a very good and strong conduct of business as a fair treatment to the consumer. And the companies are looking for profits, and if they are seeing beyond the profits, maybe will be give the market responsible, inclusive insurance as well. This is the only way to stay in the market.
Thank you very much. Fascinating, and I'm glad that you said you will make your notes available, because some of these numbers that you cited had great impact. seems to me that advocacy is still quite an important part of what we need to do in order to get, the topics that we're talking to at the core of some of the development initiatives, with the exception of climate. So coming to climate, which is, of course, it has entered the agendas and the political discourse in most countries in the world by now, I guess because the issues are quite burning. I understand that Costa Rica has recently introduced a new index insurance scheme. Can you tell us more about this particular scheme and any other measures that SUGESE, the insurance supervisor, is taking to support adaptation and mitigation efforts when it comes to climate change? I'm just saying we are running a little bit out of time, so if you could keep your answer short, that would be great.
Okay. Maybe actually, the new index scheme is an interpretation of our law. Our companies will have some. There's some worry about if the law permits the index schemes. Actually, because our laws have some concepts like that are the traditional concept of insurance. The insurance must pay only in the indemnizatory way. So index schemes are not indemnizatory because they are not adjusters of losses. They are not a technical who measure what was the loss in order to pay it. And that was a problem in our market. That was a discussion of lawyers, and no more than that. SUGESE interpret, because there are different sides of the law, that some of the articles that are applied in general to any contract will be applied to the index schemes too. So that permits this kind of a scheme. We do not need to go to the Congress in order to change the law, because our law is very principles orientated, so we can to reach the solution for this scheme. And we hope that there will be a very important step in order to design a more inclusive solution because the climate changes. The other thing that we are working is during this year we are making a climate dialogue sessions with the financial industry. This is a joint initiative between insurance, banks, supervisor, the direction of climate change, and the support of the Germany Cooperation Agency too. And the objective of this discussion and this dialogue is to raise awareness about the opportunities and risks that climate change implies for the financial sector. This participation of the market, the enterprises, the banks, and the insurance companies could contribute with a specific sector initiative in the mitigation and adaptation plans that the country has adopted under the agreement from Paris.
Excellent. So this brings us at the end of the interviewing of the panelists. I'm in the hands of Alka and Hannah here. Do we have time? I mean, we did start 10 minutes late. We're exactly now at lunch.
We'll give you 5 minutes.
Okay. I have, everybody has been punctual with 15 minutes each, but we did start 10 minutes late. Okay, so the questions from the audience. Oh, Yoshi first.
Very much stimulated what Tomás said about the role of insurance supervisor, particularly in terms of inclusion. And it seems that the regulators, insurance regulators, still quite weak in comparison with control, supervision, and so on, this inclusion part. And as IAIS part, Jonathan mentioned very clearly that the inclusion is the context of implementation in proportional manner. It's a very, very important mandate. I wonder there is a gap, and there is an important gap, and not only inclusion issue, but also SDG issues. Now it's important, very, very increasingly important for the society, but it seems insurance regulators, as a clear mandate, is still quite weak and doesn't pay sufficient role or attention. So there is a gap at the IAIS role in the international forum and national role regulators. So just I want to know how it should be addressed. One idea is regulators should play more important role, inclusion or SDGs. Other approaches like development agency like GIZ, collaboration with GIZ and so on. But what's the role of supervisors, particularly in terms of SDGs and in terms of inclusion to make a more prominent role?
Thank you, Yashi. Babak, do you want to take
Sure. Thank you for that important question. In fact, I'm delighted you asked that question because we've been on this journey for a number of years. In the early years, when we try to talk about SDGs, heads would roll. What's climate change have anything to do with it? Gender have anything to do with it, et cetera, et cetera. It's a reality to understand that the financial sector is very conservative. Supervisors and regulators are even more conservative. So just let's start with that as a premise. Standard setters probably have a role to play. Like we are advocating, we actually have a Toronto Centre guidance note out there, rather than trying to muck with the standards, which is not our role. We're trying to say when you're trying to evaluate your standards, why not try to take different lenses of the SDGs, the ones that are appropriate. That might be a start, because it's one thing for us to go country by country by country and try to preach the gospel of the SDGs and how important they are. It's quite another thing if standard setters can come forward at some point and say, you know what, with regards to this issue, that, with regards to this issue, that, because countries will start paying attention to that. But it is a complicated issue. Awareness raising is the biggest part about it. When we did our panel session at the World Bank IMF in 2016 on climate change and financial stability, there was a lot of questions about what does that have to do with anything. But now climate change has caught on, right? The governor of Bank of England, a big Canadian export, is out there talking about some of this stuff, but others are working on that as well. We have surveyed our own participants in courses. We've had participants from countries that you would think are at the forefront of climate, and they would say we have no climate issues. So you know what, as I said, it starts all with awareness raising, and then the mandate to act, and to try to bring ourselves up to a certain set of international standards. And another problem is sometimes we find that when we deal with issues, the issues all of a sudden become way too technical on their own. Financial crisis is not about liquidity risk, it's not about ELAs, and it's not about this and that. It's about middle classes being thrown into poverty. So let's try to put people back into these colossal issues that we're dealing with. So that's my 2 cents.
Thank you, Babak. Denise?
Oh, thank you. Thank you. Well, excellent presentations, and I only have a brief question. Do you think that the role of the potential gap entities could help in introducing and supporting these sustainable development goals in the overall policy making of a country?
Would like to take that? Tomás?
Sure. I think yes, because the big problem we have in Costa Rica is these documents of achieving the development goals are very philosophical. They have some orientated initiative, but the following of this initiative are two philosophies too. It's still two philosophy, and we are working with our market that need more data and need more comfort with their business too. These dialogues that we have been with the financial sector led us one real problem, that we in our country we don't have enough data to face the commitments since the financial sector. So for us it's a process. We are working in that, but we are not reaching that in the short term. We hope to have this December a planning with the financial sector in order to put in a real perspective how the financial sector and the insurance sector, the most important for me, will be faces this will be contribute to achieve the SDG goals.
Thank you.
Any other questions? If not, I think we have lunch now and sunshine.
Almost, yes. Almost. Thank you so much. Really appreciate it. I have to say I'm learning a lot of new metaphors here. I love the electricity part, that basically regulation is like electricity. When it's working, everything is going smoothly, but as soon as regulation is not there and supervision, then you have a real big problem. So that's a very good analogy. Thank you so much. Also, I think the points about women's role and creating access to insurance for women is within this all-female team at the A2II is definitely a topic we're very interested in. And then the data issue that kept coming up and how that's important for advocacy is really important. And I think that's something that we'll be grappling with over the next 2 days. Tomorrow we have an impact panel. But I think it's also a bit of a chicken and egg problem because we don't, there isn't much data out there at the moment. And but you need the data to get additional funding to then create the data. So it's, I think that's definitely something to discuss. Now, before we all head to lunch, we wanted to take a group photo with everyone, and that will be just outside of the building. So if everyone could make their way down to where you registered, and just outside of the outside on the stairs, we'll have a picture, and then lunch afterwards will be served in a room on this floor. So as you come back up, you need to listen to me to hear where it is. So don't run off right away. It'll just be on your right-hand side. And then if I could ask everyone to please be back on time, because we'll start sharply and very German punctually at 2 p.m. So enjoy your lunch, and so we'll see you down there for the photo.